Good evening, everyone, especially to you, Ma'am Marabeth. I am Meralyn Iso, and today I'm the one to discuss all about books of account. So first, let us define what is account, debits, and credits. So the account is meant to record a particular transaction. It is the basic type of record kept for assets, liabilities, owner's equity, revenues, and expenses. And also, it is the basically an account has the three parts. The title of debit, which is defined in the left side, and the credit is on the right side. So, basic information of cash on hand. So, ang makita nato sa cash on hand is, sa first column is date. So, let us define what is date. Sa cash on hand, the date is it gives information as to when the transaction took place. It is arranged in chronological order. So the second column is particular. So it provides a brief explanation of the business transaction. Then the third, folio or F. It is a reference guide telling the page of the journal from where the account was taken. So the last is debit and credit. It is the money column showing piso amount of the transaction. Then let's go to general journal. So let us define what is general journal. So it is general journal. So in the preceding sections, the debits and credits were recorded in their appropriate. T is account directly from informal description of transaction. And also, the journal is a permanent chronological record of the business transactions. And also, the journal where the information from the source documents first enters the accounting system is known as the book of original entry. So, a general journal has two-column journal with the following heading. So, mo po ni siya makita sa general journal. So first, pareha lang Japon siya sa cash on hand. So first, ang makita sa first column is the date. So date, it is provided when the transactions occurred. So syempre sa general journal, na-adjud ang date. Para dito, it provides when transactions occurred. So the second one is particulars. It is where the accounts are placed caused by the changes in the business transactions. Then third, folio. It is a reference guide to indicate the ledger account where the entry has been posted. And the fourth one is debit. It is the money column debit entry. Then the last one is credit. The credit account is intended to the right of the particulars column, while the credit amount is placed on the right column. And that's all. Thank you.
Previously, we discussed about general journal. So when we say general journal, is a book accounting that record the all transaction. So now, let's proceed about special journal. Do you think what is special journal? So when we say special journal, this special journal records all trade sales and account only. The sale of non-merchandise item is recorded in general journal. The use of sales journal helps the company save time and space in recording nominal sales transaction. So in short, when we say special journal is order to meet its objective in transaction to the company's financial data and presentation of the financial statement so that the management can easily access efficiently. So they have 5 advantages of special journal. The first one is it avoids repetition of account name. Second, only the total are posted. Number 3, the possibility of errors is minimized if not eliminated. Individuality thus eliminating reputation. Number 4, the use of special purpose allows firm to train employees in one particular type of entry. Lastly, information is more readily available because it records in more compact and unstable form, both in the special purpose journal and in general pages. So those are the 5 advantages of special journal. So now let's proceed to the types of special journal. They have 4 types of special journal. This is the cash receipt journal, cash payment journal, purchase journal, and sales journal. So let's tackle first the cash receipt journal. So when we say cash receipt journal, it is used to record the all receipt and any cash and any sources. So mo siya gamiton na dili nimo record ang mga receipt cash. So next is the cash payment journal. So when we say cash payment journal, it is a record the all cash payment. So dili nimo ibutang kung unsa ang imong mga gigamitan sa kwarta. Next is purchase journal. When we say purchase journal, it is used to record the all purchase and merchandise in your account. Lastly is the sales journal. So when we say sales journal, it is used to record the all sales in account. So dili nimo i-record mga sales na imong ang sales sa imong account.
First is purchase journal. Since the company includes several purchases and in order to save time and space in recording transactions and credit, a purchase journal is used. It is only one column purchase journal with purchases as debit and the credit is automatically the account payable. This journal is exclusively used for the purchase of merchandise on credit. So ang purchase journal diri naka-record o nakalista ang tanan nga purchases and orders sa company. So diri nakalista or diri naka-record tanan nga gigistuan or gipalit sa company. Next is sales journal. This special journal records all trade sales on account only. The sale of non-merchandise item is recorded in the general journal. The use of sales journal helps the company to save time and space in recording numerous sales transactions. So, ang sales journal, this is a book used in accounting to record and track sales made on credit. So, nasa sales journal is dili nakalista ang profit or ang kwarta nga nakuha sa company or ang halin sa company through credit. So, katurang mga ang halin or payment through credit cards or usa pa nga mga way sa pagbayad using credit cards. So, that is in sales journal. So, sa sales journal, naka-record po kung the customer's name, invoice number, date of sale, and amount. So, diri na siya tanan sa sales journal. An account is presented as, there are four. First one is date, particulars, folio, debit, and credit. So, date is kung kano saan ito place ang transaction sa business. And also, the details should be in chronological order. The next one is particulars. So, particulars, this is a brief explanation about the business transaction. So, kanang direct to the point ka idea kung unsa lang about or kung unsa lang tumong sa business transaction. The third one is folio. This helps to locate and organize records. Then, the last one is debit and credit. So, debit and credit, record of the money taken from, so debit is record of the money taken from your bank account. Credit is paano na siya kung silbi. For example, so debit is when kanang mapalitan mo kulang ka og kwarta sa usa ka account. So, mo na siya. Then mo na kag kwarta sa bank account. So, mo na siya debit. So, ang pag-transfer na pud ana sa imo sa kwarta nga imo bilang sa lain account, aputa sa imo account, that is called credit. So, the source of cash receipts, an amount recorded on the left side is credit or credit entry, and the amount recorded on the left side is credit or credit entry. The source of cash receipts can be derived from the following. So, first one is cash purchases, second, collection credit sales, third one is miscellaneous cash receipts. So, ang cash purchases, kato ni siyang, kanang, for example, mapalit ka sa grocery, so, ang imong bayad is in cash jud. Next one is collection and credit sales is through, kanato ni siyang, kanang pag-pay or pagbayad sa product through credit cards. Next one is miscellaneous expenses and expected costs that doesn't fit into business budget. For example, ani is kato ni mga expenses like office supplies, snacks, or clothing for work. So, kato ni siyang mga, kanang basic nga ginagamit sa mga workers or inside the company. Last one is cash payment journal. This journal is used every time the company will make payments. Each payment is a credit to cash and includes the following reasons. So, cash payment journal, so kato ni siyang mga gipangbayaran.
From the sales journal, each customer will have their own subsidiary ledger for monitoring purposes. Thus, the accounts receivable ledger should tally with the total of the subsidiary ledgers. This schedule enables management to determine whether or not it has accounted for all the subsidiary ledgers related to a particular general account. It also helps to determine if they have been posted correctly. If the total of the balances of the subsidiary ledger accounts equals the balance in the related general ledger account, then it is more likely that all the subsidiary ledgers have been accounted for and posted correctly. Because the above comparison with the general ledger account shows the management that all subsidiary ledgers have been accounted for and posted correctly. The general ledger account becomes the control account. For the accounts payable, the same process is being done. The total purchases in the purchase journal are transferred to the accounts payable general ledger, with each seller has its own subsidiary ledger. Thus, the total in the general ledger of the accounts payable should tally with the total subsidiary ledgers.